Hi everyone, Stuart here, and welcome to week 50 of 2024 from theproctrade.com. I hope you've all had a great 2024 so far. Busy week ahead. We've got four central banks with their interest rate announcements. Top of the shop though will be Wednesday's US CPI data recording. So watch that on Wednesday, but more on that as we go through the week. So the Australian dollar first up. The RBA announced on Tuesday the likelihood that they won't change interest. They'll remain at 4.35%, and that's looking likely to remain the case for a while. So as you can see here on the daily chart for the euro, it remains well under its 20-day moving average here at 0.65, just under 65 now, as we had a weekday on Friday. We moved under 64 and we closed down here at 63.87. We are the market's about to open as I'm recording this now. So the close on Friday was down here at 63.85. We'll see the markets open. If you go up to the weekly chart for the major, I'm just going to go through these as we start the week. You can see, it's been a long move down. The end of September, we were at testing the 0.70 area. We never got there, and it's been a consecutive move down. 1 week only in the last 10 or so has been to the upside for the Aussie, and a big down week last week as we closed on a 0.64. So watch that as we go into next week. Next low, as I've marked here, is 63.47, under the 63.50 level for the Aussie, which marks this weekly low here from over a year ago. So November, October, end of October, beginning of November 2023, Aussie got down to 63.50 zone. So potentially watch that this week as we're under 64 to start off with. I say no change expected from the RBA on Tuesday. Next up on Wednesday, we've got the Bank of Canada and US CPI. So the Canadian dollar on the weekly chart here, obviously has been weakening for a while. We are expecting a 50 basis point cut from the Bank of Canada on Wednesday, bringing it down to 3.25%, the central rate in Canada. But as you can see, the weekly chart remains very well bid over 150. Our daily time frame from last week showed another big strong rally on Friday post non-farm payrolls. To be honest, the Canadian data was quite strong as well, but the market closed here, and in fact the market's just opening as we speak. 140, 150 was breached, so the 140 level has held all week, and we had a strong close on Friday into 141, and maybe some profit taken as we come into the end of the month as well. Remember, as we come to the end of the year as well in the next couple of weeks. But strong move still on Friday. Another big day here on the 25th of November. So dollar CAD not one to ignore. So US CPI on a Wednesday as well is expected to tick up to 2.7% from 2.6%. The monthly core is remaining constant at 0.3 of 1%, but the headline for November is also expected to tick up from 0.2 of 1% to 0.3 of 1%. So adding the expectation that the Fed will go not this week but next week. So we've got 4 central banks this week, but Fed, Bank of England, Bank of Japan next week. So dollar CAD over 151, 41 and holding, and remains bid to the upside with the 20-day moving average now critically back over 140 after Friday's strong close. Next up is the Swiss Central Bank. I've just got the weekly again on here. We on Thursday, also Thursday actually, if we're talking about the weekend, we got the Australian jobs numbers earlier on in the day, but the other headline is the Swiss National Bank with their rate cut expected to come in at 25 basis points also, so bringing the rate in Switzerland down to 0.7 of 1%. This is the weekly chart here, and again, as you can see, the dollar accruing strongly against the Swiss franc up until a few weeks ago, middle of November, and we've turned around the last 2 weeks. Quite a volatile week last week, but we ended up lower and a very small range in the end for the week itself. Although we'd been as high as 88.90, couldn't quite get to the .89, and as low as 87.30. Starting to move to the downside. Friday's non-farm payroll activity is much quieter than the other majors, wasn't it, on Friday? So, but still to the downside. The key thing was Thursday's daily candle, when we breached the 20-day moving average quite significantly, as you can see here, for the first time since this cluster back here at the end of September. So we'd had a strong rally for October, most of November, peaking in the middle of November, and moving lower. And now we are short this under the 20-day moving average from Thursday. We couldn't move lower, interestingly, and we're up a tad this morning at 87.80 currently. The 50-day moving average sits at 80.87, 87.20 for the Swiss franc. Also, obviously, on Thursday, I'm saying obviously, I'm sure you know, Thursday the 12th, we have the ECB also expected to cut from 3.4 by 25 basis points to 3.15. So 3.14 to 3.15 for the ECB on the that's the calendar. Should do calendar as well, shouldn't I? Where are we? We're on Thursday the 12th. There we are. So the interest rate from 3.4, the deposit rate, the DFR coming down to 3% by the from 3.25%, and the interest rate from 3.4 to 3.15. That's what the market is expecting, and that's sort of already priced in. There will be some obviously volatility when the numbers actually announced, when it actually becomes live. Obviously, Mr. Lagarde will have something to say at a press conference. But here you can see on the euro, we had a big old move down under the key 104 area here towards the end of November. We've rallied a tad during this last half of November and the first week of December, but we can't, and we're still handling. It looked like we were going higher and testing over the 105 area. We couldn't do that on Friday. We ended up lower. We had a nice bounce initially on non-farm payrolls, but a big update on Thursday, down day on Friday, and we're currently sort of bouncing in early New Zealand trades up a tad, but we remain under our 20-day moving average at 105.85, and 106 is the big the 106 handle is the big line in the sand we need to get over. Clearly last week there was buyers at 105 here, this yellow line here, but again, as I said last week, and I've been saying since we spiked to this 103.33 level here towards the end of November the 22nd, that's very much in play as well. So 104 couldn't be breached, but 105 remains quite a strong buying zone for traders, even with the anticipation. I mean, it's been priced in for a while from the ECB about cutting, much more so than perhaps the Fed. It was a bit more nuanced how much they would go. But anyway, right on this 20-day moving average on on Friday. So watch that as we go forward, and watch that 106 level. Are we going to go higher? If not, we could, back to test 105. Will the buyers still be there again this week or next week? So nice 100 pip range for the euro dollar, as we've been in for about 5 to 10 days currently for the euro. Also on Wednesday is the US CPI data. That's expected to show a sorry, am I talking on Thursday now, aren't I? I'm on ECB. Sorry, PPI, not CPI. We talked about CPI earlier, didn't we? PPI also expected to tick up to 0.3 of 1% from 0.2 of 1%. There we are. 0.21% for November. So December's likely to come in at 0.3 of 1%. We've also got initial claims on Thursday as well. So lots going on Thursday. Big day. Claims 24,000 last week. Expect to come in around 220,000 on Thursday, 12th of the 12th, December the 12th. So 12, 24. Interesting ring of numbers there. If you like that sort of thing, which I do. Strange nuances. But yeah, so claims, what we're saying, yeah, claims 220,000. That's still a strong US economy. The not big surprise, but a stronger non-farm payroll on Friday as well. But the weekly claims have been showing that really. We had that tick up last week when we went to 224, but it's still, we go back to pre-COVID. This is still a strong US jobs market. I continue to argue as we go forward. So Euro 105, 106, big range. We're not breaking it significantly either side at the moment. Looked like we might have done the key 106 area, I say, as non-farm payrolls came out on Friday, but where we finish is key. So we're still in a downtrend. The 20-day moving average sits where we've tested it continually, but if we look again, go up to the weekly, we do with the others. Non-moving last week, and we're sort of a bit higher this week, and it's starting at 90. So there's that 103.30 again in the 104 area. So you can see a big downtrend. Are we going to go up? Well, the weekly, the key moving averages for me, the 5, the 9, and the 20 are all still up there in the 50s, all the way up there at 108.25. So the weekly remains in a downtrend. The daily also downtrend still intact, although we're testing it, but we tested it here, didn't we, for a few days? Okay, down we came. So the range is key for Euro. Friday, as far as the week's concerned, we finish with monthly GDP for sterling, and sterling closed the week just over 127, 127.35. If we go to the weekly, sterling's been one of the better performers against dollar over the last few weeks, following the big decline under the key, hugely important 125 for sterling. I can't emphasize how important 125 is for cable traders. And you see the range, massive range here from the end of September all the way from 135 all the way down to 125. Huge move. We've bounced in the last couple of weeks, but and we're over 127, so it's looking relatively positive. If we look at the daily for cable, continually positive. Actually, unlike the euro, it's broken its 20-day moving average. The Bank of England are expected to cut next week, along with the Fed. Fed now at about 80% chance of a cut next week. According to CME, following the non-farm payrolls on Friday. So we had a burst of the 20-day moving average and a significant burst there on the 5th for cable. Cooled a wee bit on Friday. So a hold of this 127 zone. There's 127s around about here, and 127.20 is positive. So cable looking okay and looking to edge up. Next resistance will come as this 50-day moving average moves down to the 128. Well, it's under the 128. Sorry, as it moves under the 128.50 zone. If this tick up continues, will be some sort of congestion around the 128 area. And as you can see on Friday, we did breach very briefly again, but like a lot of the other currencies, as the dollar weakened initially to over the 128. And let me just bring you that. I'm sure you're all watching non-farm payroll on Friday, but if you look at the spike we had as the data came out, we went over the 128 mark on there. There it is, you can see it there. And then we recoiled and give it all back very quickly, and we closed still above 127, but we gave an awful lot of that back on Friday. So dollar's back on the front foot again. So however, cable, it needs to, if this break is going to continue, we need to hold this zone. So key 127 and GDP is the major data for the US on Friday as we go forward. Other current other assets that you're all interested in, obviously the indexes were positive on Friday into close. Where are we? Sorry, excuse me. We're at 15 points, 6,090. We closed for the S&P 500. Let me find the S&P 500. It's not yeah, there are 6,090. New all-time highs for that, and the Dow, the DAX, the Nasdaq was up 0.81 of 1%. The Dow was also bid to the upside. Sorry, Dow was down, wasn't it, on Friday? Sorry, having been to all-time highs last week. So, as I've said many times, there's nothing wrong with consolidation at highs, and that's what we've got here on the Dow. The S&P continues to rally quite nicely, and the Nasdaq, the 100 Nasdaq here, over 21,500. On Friday, we closed over 21,600 as well, at another new all-time high. So stocks continue to be well bid, and as I said many times, for many years now, December is typically a really strong month for stock markets, and so far first week has proved the case for the US markets as well. Gold and oil, obviously we got the OPEC meetings this week, Tuesday, Wednesday, the monthly news is coming out. Tuesday's the meeting. Obviously the situation in Syria, in the Middle East, is obviously, as Bashar Assad has fled, and he's been given asylum by the Russians in Moscow. Power vacuum now, potentially. The West twitching around, no doubt about that. It's not directly impacting the markets, but certainly sentiment-wise, you could expect some sort of unnerving. Obviously, we've got the handover of power in the United States as well, with Trump meeting Macron, and UK's Prince William at the opening of the Notre Dame Cathedral yesterday, Saturday. Yeah, but so stocks bid. Gold here on the daily time frame, you see, is that today? No, that's Fridays. We were down significantly on Thursday. Again, it's really a bit of a meander. Remember, I'd been short here and I'd closed it early in the week, but that triggered again. Actually, it triggered short on my other system. Was it Wednesday? Was it Thursday? I can't remember. I think it was Thursday when it went back up again, wasn't it? I think. And then we were down again on Friday. So if you can see here, this still looks a bit iffy for gold to move higher, my friends. The 20-day moving average has been held for 1, 2, 3, 4, 5, 6, 7, 8 days. Really, it hasn't been able to break up. It's not really directional. We've been really moving sideways, but the big down candle, which spurred the initial short on the 25th, we haven't bought back into it, have we? So 2700 looks a long way away now, and this was the action on Friday, closing a little bit higher than we opened, but lots of potential volatility, testing the 20-day moving average, but we also tested down the 61.13 area. Remember that 26, did I say 16? I meant 26.15 area. We tested out that the next low we were looking at is 26.05 if this was going to continue to move low. So interestingly, my automated system triggered short again. The one I'd put on from here was closed out manually for a loss, but this triggered short again on Friday's close at 26. I think I filled at 26.31 or something like that. But that's, it's not, it's not a trend. It's not, the moving average is not moving down, but we're still flat. So it's not a big signal, unlike this big candle here, even though the moving average are messed about, unclear. That's looking to perhaps edge lower, so maybe tested this week. The central banks moved that. And finally, oil and crypto. Bitcoin here, back over the magnificent 100,000 level. We spiked over it, obviously, as we said, a big lift following the appointment of Atkins on the 4th. We gave all of it, or most of it, back. The 5th, Friday, we were up and over the week through 100,000 at one point, but we closed just shy of it. The weekend, yesterday we were up, and we're up again today. Remember, I'm recording this on Sunday the 8th. We're back over the 100,000 level as we speak. So again, remains bid, and again another one that's consolidating the highs. That's strong. It's 20-day moving average now for all you Bitcoin traders at 95. 500, so 95,500 is where our 20-day moving average sits for Bitcoin. So that's bid to the upside. And finally, oil, energies, oil, US oil 67. We closed on Friday to the downside, right into this key support area. So are we going to see a bit of a bounce from there? Who knows? The situation in Syria, I say, will impact things when markets open later today. So that's all. I say four central banks. We've got the Australians, the Swiss, the Europeans, and the Canadians, all reporting, anticipating what they're going to do with their interest rates. Big moves from the Bank of Canada, no move from Australia, a move from Europe, and a move from the Swiss. And US inflation and PPI as well this week. So plenty to get your teeth into. It's week 50, only 3 weeks of the year to go. So best of luck, everyone. We'll see you all next week, and take care. And as ever, may the pips be with you all. All the best. Bye-bye.